All right, folks, back to work we go. Boy, fantastic job today. If you guys follow the game plan we talked about last night, there was relatively easy money to make this morning. Hope you guys made a bunch of cash out there as well today. And I'll tell you, today was the first day in a while where it really felt like these buyers were back in control. If you watched last night's video, we were expecting those bears to try to run this thing lower. We were right there to absorb that pullback. Fantastic trading today. And now we find ourselves 1, 2, 3 legs higher on both the S&P and the Nasdaq. And I'm having some deja vu right now, right? This brings back memories of earlier on in this month before Veterans Day holiday when we found ourselves 3 legs higher. And right now on the S&P SPY, right now, Nasdaq triple Qs, we're definitely pretty bullish right now. We're running into some major turning points up overhead. In these situations, 3 legs up, we're definitely bullish, major turning point overhead. This is where I look for a strategy I call a pop and pullback strategy. We're going to cover that in a lot more detail, of course, in tonight's video. We'll cover some entries, exits. We'll cover the entire roadmap by the time we're done tonight's video. Before we dive in, though, and talk about entries for tomorrow, though, let's check schedule for tomorrow because there's some really big news tomorrow before they close things up here on Thursday, of course, is the holiday. 8:30 Eastern time. Boy, is there anything they're not reporting tomorrow at 8:30 Eastern time? We got durable goods orders, some delayed durable goods. We got GDP. We got jobless claims. So yeah, pick your poison tomorrow. But I would definitely be aware. There's a big block of news there at 8:30 Eastern time. Expect some volatility around that. My focus though tomorrow is that personal income number at 10 o'clock Eastern time. Don't forget, this has always been J-Pow's favorite gauge of inflation, right? That PCE number, that personal income number. And if you guys watch these videos, you know, anytime we have 10 o'clock news, Red Star News at 10 o'clock, you always want to be paying attention. I will say one thing too about tomorrow. Tomorrow does tend to be a bit thinner on the order book, a bit lower volume. Liquidity isn't as good. Tomorrow's a travel day for a lot of people traveling for Thanksgiving, right? So be aware. We'll do our best tomorrow, but tomorrow will probably be a kind of an early in, early out, smash and grab type of session, which means we'll take our money and run, hit the holiday weekend here, and hopefully have a great Thanksgiving holiday coming up here. And also be aware, too, there'll be no video tomorrow night. We'll come back on Monday, resume our normal schedule after the holiday, back here on Cyber Monday, December the 1st. Let's get back to our charts, though, because it's good to know when the news is, but the money is made on the charts. I like to use these hourly time frames as kind of a bigger picture, overall directional filter, but I take entries, though, off the tick charts. Tick charts, and by the way, if you're watching for the first time right now, all the time frames I'm using right now, upper left-hand corner, that is a 7,000 tick chart. And in case you're tuning in for the first time tonight, welcome to the channel here. That is the 21 EMA. It's the only indicator I need to make repeatable profits each day. There's a lot of big clues here on the tick charts right now. One big clue, it's that trading range, the range we talked about last night. We got that beautiful pendulum swing. If you watched last night's video, well, what happens after a breakout like this, after a convincing breakthrough, that pendulum swing, you have to think now that that breakout pullback is just begging for a pullback right now. Combine that with this range right here, and we know that ranges like to rotate, right? So the amount above, the amount below, look at how well that lines up right there. And on top of that, my goodness, that bull channel drawn off the highs, off that low. I mean, gorgeous, gorgeous area right here. I mentioned earlier that we're bullish overall into major resistance overhead. So it's easy to see, I think. My favorite trade for tomorrow is that pop up and that pull back. So I'd love to get a nice deep pullback. And just as we saw this morning, nice strong pullback. We always in the trade room, something scary. Right? Something scary, something that moves so strong, it makes all the bears think it's a reversal. But again, we know better, right? It's a bull market. It's a range breakout pullback. Okay, so my goal tomorrow will be get another scary run going lower. Look for one of those 1 try, 2 try, Bear traps, squeeze those stops. And remember, where do markets want to go? They want to rotate, right? The amount below the range, the amount above the range, just like that technique we use today, right, to find that final target later on this afternoon. So that will tell us now where the market now wants to go. And remember, guys, if there's one thing you learn from me, it's to add to your winners whenever we have range rotation. Again, you want to add to your winner when you start seeing separation off that moving average, that higher high in price. I'm getting in right below that low. Use that pendulum swing for that target going higher. That is kind of the dream scenario for the pop and pullback strategy I'm watching for tomorrow. But let's not forget though, we may not get that bear trap down here. We may not get it. We may run lower, and there may be so many buyers down here, it may just whoop and run right back up again. We saw one of these this morning in the trade room. If it pops up off of that low, what are the two rules on a V bottom play? First rule, find a channel. Second rule, most important rule, get in under prior swings. That's the key, right? You can't see it very well on this chart right now, but there was a beautiful channel off those highs right there under a prior swing on the faster time frame we use in the morning trade room. So V bottom over there, if V bottoms off that low, remember, do not chase after it. Get in below prior swings. My favorites are always get below that 21 EMA, trap those bears getting short below it, buy into their stops, and get that rotation going higher. And then one last thing, don't forget, we're right into all this overhead resistance. Remember, do not be surprised if we saw, for example, a strong rundown. We see these all the time in our trade room. Strong rundown, a bear trap. We try to make that run back up again, but every once in a while what happens is it'll pop up, it'll hold the underbelly of that range and make another leg going lower. Now, in these trades, as you guys will learn in my free video classes, I always go for a one-to-one first target. So I take a quick first target, get rid of the risk on that trade. But remember, if we break out going lower, think about what we call the money zone, right? The money zone is that measured move calculation below that low. So think about the money zone, right? The breakout leg, the measured leg. Think about that area right in there. Horrible spot to be a seller. Great place for a bear trap. We call these retest trades in our trade room. Same basic idea. Trap the bears in, squeeze those stops. As we make our way back up to take up those big highs up there, we're adding to our position. Shallow pullback, higher high in price, getting in right back in below that low. So remember, bull market overall right now, big area of resistance up overhead. Do not be surprised. We run lower, little scalp winner there, roll it over, retest, watch that measured move technique we love so much in our trade room, and then trap them. Bear trap, add on, just like I teach inside the free video course. Now, question for you. What if we go higher here overnight? What if we start trading sideways overnight? Remember tomorrow, big news tomorrow. What if we turn sideways? How does that change our game plan? I'm going to talk about that in more detail in 2 seconds. But first though, if you're tuning in and watching tonight for the first time, this might be a brand new strategy, a brand new language I'm speaking. Bear traps, add-ons, range rotations. I get it. Don't you worry though. I teach all these entry patterns, the entire roadmap in a lot more detail in my free video course. In fact, I have a ton of examples of all these entry patterns, a lot more detail. Guys, what I'll do is I'll put a link up top there for you. Upper right-hand corner, hit that link that popped up there and take that free trading course, because the strategy I teach in that short video series will teach you a simple trick we use in our members trade room that literally tells us exactly where to find the winning trades you stay. It is stupidly simple. You'll laugh when you see how simple that technique's. More importantly though, I want to teach you my 4 favorite entry patterns, because we make our money, right, by timing good entries. So I want to show you guys how to time better entries, get your confidence back in your trading. The bottom line is, if you're still missing the best entries right now, if you've lost your confidence in your current strategy, what are you waiting for here? Hit that link that popped up there. Watch that free trading videos. Everyone loves all the trading examples I include in that short video series. The best part is it's completely free for you. Be aware too, guys, I'm going to put all the important links you guys need to learn the roadmap, time better entries, get your confidence back. I'll put all those links down below tonight's video. Start first on that free video course because most folks start making money all on their own, all from that free video class. So start there first. Oh, and don't forget too, we trade together every morning in our trade room, 8 o'clock Eastern time. That's what the good stuff is every morning. I'll put that link down below. If you're on Twitter or the X platform they call it these days, I post a ton of charts and videos and mindset stuff on my Twitter feed in between these YouTube videos. Give me a follow there. Again, all the details you guys need are right below tonight's video description of this YouTube video. Perfect. So what we cover so far, we love the idea of that nice scary pullback, that bear trap, and that rip right back higher again. And we know that if we get what we saw this morning, right? If it V bottoms off that low and pops up, the goal is to what? Get in below prior swings. Get in below prior swings. Yes. And if it does roll over and goes one more leg lower, we're keeping an eye out for those measured moves and whacking that bear trap right back up once again. Now, as I mentioned earlier, I want to talk about if we keep going higher here, because again, the bulls are back in control right now. Got a holiday coming up here. Santa Claus might go a bit early here this year. We'll see. So we might keep on running higher here. I want to talk about that. Before I do that though, one more question. What if all we got was below a swing like this? Wouldn't that make sense? If you're going to my free video series right now, this is a great spot for a bear trap, right? Higher high in price, strong move. So how would I adjust my position here? How would I adjust my entries? Or would I adjust my entries if all we get is a shallow pullback? Well, the problem is this. We know we're running into major resistance up overhead. We made a pretty big move up so far. So would you agree that is buying relatively high, right? It's buying relatively high here below that prior swing. So what I'll do is whenever I'm buying relatively high like this, I want to focus on getting in underneath a prior swing. This one little adjustment will keep you out of a ton of losses, and will make sure that you're getting that first target hit nice and quickly. Now, if you're in my video course right now, that's called a technical bear trap. So I just want you to be aware here. If I see a really deep pullback, I can risk a small amount of risk for a much larger amount of reward. I can be relatively aggressive on that trade. But if all I see is a shallow pullback, I'm not buying low now. I can't get, see, look at this. If I see 2 tries right here, I can't get a good risk reward ratio right there. I can though, if I can get in underneath a prior swing. This is where smart money traders are getting in. They're getting in below prior swings, higher high in price, below that prior swing. There are lots of variations of this, but this is in a nutshell, if all I see is a shallow pullback right now, you want to buy below those prior swings, get that risk reward ratio, right? Get that risk reward ratio on your side that will attract more professional traders. And you know the self-fulfilling prophecy works, right? The more people take it, the better it works for you. So stick to the shallow pullbacks here, buying underneath those prior swings. Let's keep rolling now over here on the Nasdaq. Boy, Nasdaq is definitely lagging a bit behind right now on the S&P. And again, it definitely felt like a bull market today, right? It definitely felt like those buyers were back control. See the big wicks right there here on the hourly time frame. And you'll notice right away in the Nasdaq right now, a couple things here. First of all, we're right around the underbelly of that range. And we know that ranges, what do? They love to break out pullback. So even though I do see that major turning point overhead on the NQ and the triple Qs, I would definitely think though right now we're right there right now. We're right there. If these bears If they're going to hold this thing, they're going to do it here. They'll do it up here. So we're really at a very big turning point, or a very critical point right now on the Nasdaq here and the S&P. But you'll notice though, right? 1, 2, 3 legs higher. It does look like we should be heading our way up to that 25,310 area. But again, I wouldn't go counting these bears out just yet. So bullish, but definitely at some key levels of resistance. This is where those pop and pullback strategies really come together. Let's go grab the tick charts here now. Remember, tick charts make everything easier. And by the way, guys, if you're enjoying this video right now, please help me grow this channel by hitting that like button. Make sure you subscribe. I know we're all busy people these days. I appreciate you guys tuning in with the holiday here this week. So thank you guys so much. All the likes, all the subs, all the ongoing support I get in the comment section. I appreciate you guys tuning in and watching these videos. There's a lot of clues right now on this chart. First big clue is that range right there. What do ranges do? Yeah, they like to rotate, right? The amount below, the amount above. That puts us where? That puts us right about that key turning point up overhead at that 25,310. That's a big clue. My favorite clue though overall is this range down here. That breakout pullback zone is looking mighty lonely right now. It definitely is. And remember this, guys and gals, it's not an if, it's a when. You can literally, it's almost guaranteed eventually we will go back and test those ranges. That's the way the markets work, right? They're high volume areas, lots of overlapping candlesticks. It's just a matter of time. It's not an if, it is a when. Love that breakout pullback zone. And of course, that range right there would measure the amount above, the amount below, and my goodness, can it be anything better? That channel, the breakout pullback zone, I mean, come on, right? It's a bag of cash just sitting right there. All we gotta do is wait for a nice sharp correction, get a nice bear trap in there and squeeze those stops back running higher. And again, don't forget to add to your winner during these range rotations. Always, always, always. Adding to your winners will transform your trading because now your losses are much smaller compared to your winning trades now. If you want to make a bunch of money in trading, right? Add to your winners. It absorbs your losses. As we was in the trade room here, we do so much work to get into a good trade. Keep adding to it. Keep adding to it. Okay, so same basic game plan we said earlier on the S&P. But here's a question for you though. What if we keep going higher? What if we go sideways here right now? Good question. So first of all, this range right here is a really, really big clue here. As we go higher here, I'm looking for separation off the moving average. Separation means strength, and that means a shallow pullback that separates away from that moving average. I'm looking for nibbles as we go higher here right now. Separate off the moving average, higher high in price, nibbles. And remember, breakouts, range breakouts. The breakout leg is a measuring leg. I don't know exactly how big that breakout leg is, but I always look for, when it's a range involved, the breakout leg is always the measuring leg. That will tell us where to cash that paycheck. Hopefully, it's up around that pendulum high, up around that 25,310 high. Okay, that's the first step. The second step now is a two-legged pullback. Two-legged pullbacks are typical for breakout pullbacks. Now, when I say two-legged pullback, think about a measured move, A, B, C, D, and between you, me, and YouTube, my favorite two-legged pullbacks are always a bit more than a measured move. In fact, I wouldn't complain at all if it went all the way down below that 938 area. The bottom line is this though, I'm gonna use that range for a breakout pullback. As we're going higher, I'm taking nibbles, right? Small size positions because you're buying relatively high. But if I can get that separation though, the odds are pretty good on the way up to the complete that pendulum swing. This would be a technical bear trap, like I teach in the free video series. Then one leg, two leg, a bit more than a measured move is ideal. And once this thing starts to feel like a reversal, remember, I'm not gonna pick a bottom on this. I will not blindly buy that because it might roll all the way back down again, complete a big old pendulum swing, give us a juicy bear trap down there and whoop, right back up into that range again, right? So we don't blindly trade this stuff, right? Hopefully you're not either. Now, at that point, same thing. Bears once, bears twice. Trap those bears in. Lots of examples of this pattern set up. We see a lot of these in the morning trade room. And of course, bear trap into what? Into add-on. And then we look for where we go back up to retest that high. If you were to look up a breakout pullback in the dictionary, this is exactly what you would see. This is your classic breakout pullback pattern. It's a technical bear trap as you go higher, a two-legged pullback, a two-try bear trap, an add-on with separation, and we cash the big paycheck at the retest of that big high, some turkey money, and hopefully some to spare there for the holiday coming up here. That's our breakout pullback as we go higher here. One more thing too I'm watching for tomorrow is with the holiday coming up here, we may start grinding and grinding and grinding. Whenever we see a grinder, we talked about this last night, grinding markets are tough to stop, and they tell us to mark that trend line off the high, bring that trend line down around that low. What do? Look left, find some prior swings, get under prior swings, get those bear traps trapping, and squeeze back up again. If it grinds up, the focus is buying below prior swings around the low of that channel. And again, you'll learn these entry tactics in the free video series. Grab the link linked up below the video tonight description of this YouTube video. That's our grinder. And the final one, the easiest one, is if you go sideways up here, right? If we make a run higher here and we go into a new range up here, this gets really, really easy because what do we know about ranges? Well, first of all, we know the current range. As we talked about last night, the current range wants to what? It wants to rotate, right? It wants to rotate using things like triangles and pendulum swings. The amount below, the amount above. Okay, so new range, it wants to rotate. What do previous ranges do? Previous ranges like to, you got it, they like to break out pullback. So if we go sideways tomorrow, the game plan gets even easier because what do ranges represent? Ranges are magnets. Ranges are where a lot of volume piles up. If you understand market profile, auction market theory, you know that ranges, they make the market stick, right? They make the market stick like a slow grind, right? It sticks up there. A lot of volume changes hands in that area. So a really easy game plan on this is if I can see a range here and a range below, wait for that pullback, get that 21 EMA coming over, don't pick that bottom, trap those bears in, squeeze those stops, add more as it rotates, and we know now the amount below, the amount above, right? That's the key that you want to remember if it goes sideways here for tomorrow. And don't forget that knife cuts both ways. For example, we may go into that range at some point tomorrow morning. We may take out that high, complete that pendulum swing, take out that turning point high, and we might get shot right back down again. Now, I'm going to warn you right now, these always feel like reversals, but you know better now. It's not a reversal. Find the range, find the pendulum swing off the high, off the low. That now becomes our entry on the opposite side. If we're lucky, it'll line up right along with that range we have below us. In my experience, though, newer traders, this oftentimes fools them. Because as we almost always say, as we see a lot, is that when markets rotate from one side to the other, when they rotate back and forth like this, they get really fast. They get really, really fast. And it can be very scary, right? But again, we're bullish overall right now if we pop up. Now, how would I sell something like this? A crown reversal pattern. Crown reversal patterns are technical bull traps. Buyers trying once, lower low, buyers trying twice. If you ever see me selling in a bull market, it's this pattern right here, right? It's that pattern right there. It's buyers once, buyers twice, ideally get right above that high, nice strong red candle, and you're in. And as I always remind you guys, when you're going against the overall trend on the hourly time frame, it's half size trade. It's quarter size trade. If you're not making money yet going with the trend, this might be a simulated trade or a demo account trade, right? So be careful there on the counter trend trades. And again, the amount above, the amount below. If we're lucky tomorrow, we can play both sides of that range. It's a crown reversal pattern to sell off the high, but it's always going to be that two try bear trap off of that low, because when I go with the trend, I can be a lot more aggressive. All right, guys, that's my game plan for tomorrow. As always, I don't have a crystal ball, but I do know based on what we get tomorrow morning, that's my game plan tomorrow morning in our trade room. Now, speaking of tomorrow morning, last day of the week, don't forget the good stuff. Trade room, 8 o'clock Eastern time. Guys, the easiest way to start making repeatable profits is to learn and trade along every morning with me at the opening bell. You will love our morning trade room. I'll put all the important links you guys need to get started down below tonight's video in the description of the video. Start first on that free video course. You'll love all those trade examples there. Everyone loves that free video class, but promise me, learn the basics, get your confidence going, then come join us in the morning trade room and we'll do it together. In the meantime, guys, hope you learned a bunch tonight. Hope you guys earn a bunch of turkey money tomorrow as well. Be well, be nice to each other, guys. Have a great, safe holiday weekend. Back on Monday. And as always, you better be here next time. Adios, amigos. Bye for now.